Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope it's been a good morning so far. We are taking a look at the post sell-off session. So yesterday we had a big old down candle, and obviously think about the way market messaging out there in the internet and television, any of the media. Remember, it's going to reflect what's happening. It's not a matter of, hey, buy a dip because the overall trend is up. It's going to be talking about that much more myopic, hey, today's a down day. And then, of course, remember, all the bearish analysis will come after the bearish price action. So it's our job, you and me, we have to look at the context of the move. And I'm mentioning this because yesterday, we went on a bit of a buying spree. One of the setups, I'll tell you, we had 4 setups in the Sector Secrets Mastery, and I'll tell you what they are right now. We had the first setup was to buy gold again. And so let's go to GC. I'm going to talk my book because look, that's all that matters. Rog, what do you got on? Are you bearish? Did yesterday spook you? On and on and on. No, not at all. So we're long gold. Why? Yesterday was a blue light special. All right, I'm totally dating myself here. Yesterday was a blue light special. Why? Because the gold chart was already in an uptrend. And because of that, yesterday was it going on sale. The old saying seems to be true. Wall Street is the one place they throw a sale and nobody comes. So we're long gold. All right, and that's, by the way, via GLD. The next thing we did, and this is a shout out to one of our members who's been noting, hey, we have a good bit of relative performance in the regional banks. That's the KRE. And so Zion's one of the larger weighted stocks. Now, the challenge with Russell and regional banks is they are not high concentration weighted indices or sector ETFs. Doesn't mean there aren't a few larger stocks. This is one of them. So it's doing pretty good. It's up off the low. So notice today where we are in terms of, let's see, 51.89. So it's pretty much, nothing really here pre-market to report. But I'm looking for a little bit of a move higher. If the Russell can remain above 22.25, probably pretty good chance that the Russell will take the KRE higher, and the KRE will then, in that alignment of index sector stock, benefit Zion. All right, the next one was AVGO. Again, focusing on sectors that are relative outperformers. All right, so these are all the alerts that got sent out that I'm walking you through. So AVGO right now is going to open up around 175. Not too bad. I really want, this one's a tricky one because it was a trend. It's wobbled out of the trend, but it's got a really cool Darvis support level. So this is one that in the mastery, we're very likely to tighten the stop on, but still look for upside. So we're long AVGO. It's up a little bit from our level. Now, look, 175 may not seem like much, but this is the thing. Our trigger was 173.40, which is way down here. So even though it's up just a little bit, we're up $1.60-ish, right, on where we got in. And that's the key, finding that level of support rather than buying it when it's moving higher. And the last one was the SPY. So those are what we sent out as alerts yesterday. So, look, like I say, I could sit around analyzing the market, or I could simply tell you what we did. And I think what we do is far more interesting and helpful than what we think. AVGO will benefit from the NASDAQ moving higher. So it'll be very, very important we stay above 20,275. That's the level, that line in the sand, that sentiment level we'll be looking at for upside movement. If the NASDAQ moves higher, again, alignment would say at least technology, semiconductors, communications, consumer discretionary should benefit. So I want to see semiconductors up. They're going to be opening up around 251.70. So again, that's up from where we are. And if semiconductors are up, that bodes probably pretty well for our, here, let's open this up. That bodes probably pretty well for our AVGO setup. Now, where is AVGO in the bigger scheme of things? Why does that matter, Rog? Because AVGO is the number 3. It's a high weighted stock in the SMH. So I'm looking at that rising tide taking the boats with it. All right. We still have a long position in NVIDIA, so I don't want to neglect NVIDIA. We've been long NVIDIA. In fact, I'll show you our trade recap here. So at the end of every day, we send out a trade recap to members so that they know what we have and where we have it from, right? So this went out yesterday. So we're already in NVIDIA, Grace. I wouldn't mind getting in again. I have no issue with that. For example, I'll give you so take a look at our gold trade. We bought gold at 310 and 285, hit the first target, and then yesterday's weakness in gold, we were able to close that out at a break even after already taking out off the table, about $1 or so per contract. But then we protected our downside by saying, look, it's come back to where we bought it. I'm going to go ahead and close it out. But we got in again. So look at our new gold swings. We've got all sorts of gold swings. So I don't mind if NVIDIA gets stopped out. And by the way, I've got to exit it kind of soon anyway, because I'm running out of time on that trade. But please note, while I have an open trade on in something like NVIDIA, if it continues to move with the same structure, that same strength, then absolutely, I'm going to look to roll with the trend. And that means that my 25 October that are going to expire tomorrow, we've already taken off the table that $430 purchase at $595 and $1,120. So now I've got that tightened stop. So either that tightened stop is a safety net, it's going to get hit, or I'm just going to run out of time and that's it. So the 1120, right? The 1120 is almost 3x. So I love that. But if NVIDIA pulls back, and I would love to see it pull back again, but it's got to pull way, way lower, right, for me to get in again. But if it pulls back, as long as that structure remains up, I'll do it. But I'm not going to buy NVIDIA at the highs. Please know, gang, I'm never going to position us at the highs. Let me give you a really great example of how important understanding when Wall Street throws a sale. I'm going to talk about McDonald's for a moment, not as a trade. I don't want to touch that thing with a 10-foot pole till it settles down. We get a better narrative. So earlier we bought McDonald's this year, just a few months back. We bought McDonald's based on weekly time frames at $253.50 or 30 cents. Call it 253. That was the share price. Or for traders who want to go with leaps, that was the trigger for the leap. Even with the scare that's happening right now, and it is pretty scary, the scale of which we don't know. Take a look. By waiting for that opportunity, we're still up by a lot in our position. That's the difference between someone buying McDonald's, say at a 52-week high at the end of September, saying, oh my gosh, this is great. Let's buy McDonald's at $300 versus let's buy McDonald's at roughly $250, right? So to me, higher highs are what your typical retail trader does. There's not a higher high that they can resist, because why? What happens at higher highs? The financial media starts talking it up, right? And let me get this back out of the way. The financial media starts talking it up. Such and such is at new highs. So what, right? That's what I think when I hear that on TV. What I need to know is, when is a good, properly structured stock or ETF or the index, when is it on sale? And I will buy the dip. And I've just described pretty much the entirety of my 30 plus year career. Find the trend, buy the dip, rinse and repeat. That's it, right? So I'm not going to buy at a higher high, but Grace, I do like NVIDIA, and that's definitely a symbol that I want to continue to focus on. Another one Matt just mentioned was Uber. Do we like Uber? Yeah, within the XLI, there are a number of symbols that absolutely have my attention. And remember, the way that we watch this build in the mastery is a very fluid process. I'm not looking at what everyone's talking about. Tesla, whatever, right? What are the stocks right now everyone's talking about? Bitcoin, Tesla, whatever that kind of stock of the day, stock of the week type thinking is. I'm looking at structure. And a lot of times, structure is not what's emphasized in most analysis. It's certainly not what's emphasized in financial media. So when it comes to XLI, Matt, I'm with you. I like Uber, Honeywell, RTX, ETN, ADP, even UPS. UPS has earnings, so I'm going to pass on that. And that brings up another point. During this blasted season of earnings, be careful about the position you take in front of a major volatility event. So, for example, use it to your advantage. So, for example, we've got Honeywell here, right? So, if I'm looking at Honey and I can see here that we've got earnings coming up, the thing to remember is let's see if earnings may not create the pullback that we need, because I'm not going to buy Honey at 220, whether there was earnings or not. But the catalyst of that hot zone, that earnings event, could be the reason for the movement. So focus on the trends and just be wary of earnings right now. So yeah, I do like Uber. Uber earnings are what? Halloween 31st. So we're getting a little close. We're getting a little close. That means my time frame from entry to follow through to exit is fairly short. And those truncated time frames don't give us the advantage of being able to follow a trend for days, if not weeks on end. But I definitely will keep an eye on it. But I have to be aware of that proximity to the earnings release. Yeah, Grace, SPY, QQQ, great positions. I think they mimic exactly what we were looking at and the kind of positioning that I took. So we're taking advantage of regional banks, technology, and gold. Those were our largest positions. But those are our most recent positions right now. All right. Brian asks, how do you get the end of day recaps? Brian, I send them out as an alert. So if you're a member of the Sector Secrets Mastery, you get an alert that looks like pretty much this is exactly what I cut and paste. So if you're a member of the Sector Secrets Mastery, you'll get this as an alert. And not to mention my actual alert. So let me show you this. Boom. This is what I sent out. So this is an alert format. So if you're wondering, Rob, what's an alert? So when you're in the mastery, especially if you're in the room, you'll hear this cash register sound. And if you're not in the room, it'll pop up on your device. And it's pretty cool. Hang on, let me see if I can't. I don't know that you'll be able to see that app on the video for those of you on YouTube and whatnot. So I don't know if you can see that. So every day we get send out all those little alerts. And so if you're not in the room, the alert will show up on your phone. It pushes. I kind of watch my own. I get my own alerts. So I hit the enter button. I can't even count to 2. And the phone tells me, hey, this is the trade idea. So those go off as alerts. But this is what we sent out, right? So I tell everyone what we're going to buy. It's a swing trade alert. What we're going to buy, the expiration, and then what trigger, right? So this is not an alert that you might be used to seeing, which is filled at. That tells you what I already did, right? It doesn't tell you what price I did it or anything like that. So what we do is we put a full blueprint out there, and that's what the alerts look like. All right. Okay. So I do like Uber, but yeah, that earnings window is going to be tough. What are my thoughts on bonds? I'll tell you what, Ryan, for the most part, it's been just a big cup of nope. Bonds usually front run monetary policy and expectations by about 3 to 6 months. And right now, gold has been a nice uptrend, reflecting what's happening with real yields. But bonds are on a journey of their own, and they're in a downtrend right now. So the only thing I can do, Ryan, and probably should have been doing, and I'm not, this is just an opportunity that I haven't taken advantage of. But anytime the red candle has hit the gold zone, let me zoom in so you could see. Red candle, gold zone, red candle. I really should be buying a lot of puts in TLT because that's been actually rather magnificent. Yeah, so great question, Ryan. And it's reminded me of things I know I should be doing. This is just long puts. This is just long puts. So I'm not in any way bullish bonds. Not on the daily and really not on the weekly either. Wow. All right. Jess said, I entered SPY and AVGO. Do I have any thoughts on Bank of America? I have a lot of thoughts on financials. Sure. That's another one that we're looking at right now. And we're past earnings. And we're past the impact, for the most part, on the highest weighted stocks. So now we can get back to work. Where are the trends? And it's really a matter of where aren't the trends, right? Where do we not want to be buying? Not many places, because even the neutral stuff like Citi is mostly bullish, green candles. I would avoid Berkshire, JP Morgan, MasterCard, which is usually kind of a liquid on open interest, Bank of America, Wells, Goldman, American Express, Morgan. They all look pretty darn good. And then XLF itself looks pretty darn good. So I wouldn't single out Bank of America probably any more than any of the others. But if a green candle hits the gray zone in an uptrend, that's the recipe. That's what we've been teaching in the small account growth plan, which is really the any sized account growth plan class. That's, by the way, still going on. And these are the kind of trades that we're putting on. In fact, I think on Tuesday's video, right, I shared what we did so far in October. So if you want to see not only what I'm in right now, what I'm showing you here in Turks and Coffee, if you look at Tuesday's free video, if I remember right, I am remembering correctly, I went through a lot of detail on the positions that we've had in the mastery in October. And I talked actually about what a challenge the early part of the month was. And if we did not have a risk management oriented approach and a trend seeking watch list, it probably still would have been tough, as opposed to the second half of October has been pretty darn stellar. I don't think we've taken a loss since the midpoint of the month. Early part of the month, I was probably 50-50, if that. It was a tough one. We just weren't getting followed through until the S&P finally broke out. And if you remember, there was a video that I sent out called "This Move Changes Everything." It has. It actually has, when the S&P finally broke out. Cash Insomnia asks, thanks for sharing my book. It's the only thing that matters, isn't it? What, if any, are my thoughts on call walls? Call walls. I don't look at whatever that is. It's not something I put into my analysis. So if you want to know what's going on with NVIDIA, if we're talking about options, right? What we're talking about is open interest. So call it call walls, call it a bologna sandwich. What I'm going to deduce is you're asking about open interest. Yeah. Okay. Two ways to do that. First of all, there's a lot of ways to understand where levels of resistance are and support. First, I'm going to start with some volume levels. So what are price-based volume levels? And I've switched on over to TradingView, by the way, for a moment. And this shows me where all the different levels of volume are, depending upon the amount of data that I have on the screen. If I want to look at this quarter, that would be my volume profile along the right side here. And this is on the daily time frame. The other thing you can do to understand that stuff, it's really basic, right? But a lot of times just the basic stuff seems to be forgotten. It depends on what expiration are you focusing on, right? So if I'm going to go out to November 15, which is where the bulk of the size is, right? And we're trading at 139.5. What levels are overhead? What levels are below? And how would price action behave based on those things? So I just look at the open interest, and I teach this going into every options expiration Friday, the third Friday of the month. And I just teach people how to understand what the open interest size means, right? So this far out, it's not as intense as the OpX week. So I'll do a combination of trend plus momentum plus the open interest. And so I don't put any stock into that. It's size, right? But you have to take size within the context of the movement, right? We're long. So I guess the bigger thing is, could 140 be a resistance level? It could, but it could in turn also be potential support, right? So it just depends. So yeah, I don't use that kind of lingo. All right. Anyway, I'm out of time. So as always, gang, thank you so much for being here for Charts and Coffee. I'll see you tomorrow. Same time, same station. Be good to each other.